Here are the crypto top headlines covered in this video. Ripple Labs escalates dispute with SEC, files notice of cross-appeal. Next, Ripple launches digital asset custody services for banks and Fintech. Also, 47% of traditional hedge funds maintain crypto exposure, says report. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple Labs escalates dispute with SEC, files notice of cross-appeal. Ripple has disclosed plans to take its legal battle with the SEC to a higher court in the United States. Ripple Labs has filed a notice of cross-appeal in its ongoing legal battle with the United States Securities and Exchange Commission. In an October 10th filing in the U.S. District Court for the Southern District of New York, Ripple disclosed plans to take its cross-appeal to a higher court, specifically the Court of Appeals for the Second Circuit. The notice is a legal step to formally register the cross-appeal. The Court of Appeals will review both the original appeal by the SEC, which its notice was filed on October 2nd, and Ripple's cross-appeal to determine if any legal or procedural errors were made in a decision from August 7th. During that time, a federal judge ordered Ripple Labs to pay a $125 million civil penalty for violating securities laws. The regulator previously requested the courts to impose a $2 billion fine against the company, while Ripple argued that any penalty should not exceed $10 million. The legal dispute between the blockchain company and the U.S. financial watchdog started in 2020 when the SEC alleged that Ripple's sale of its cryptocurrency token XRP constituted an unregistered securities offering. In a key decision in July 2023, Judge Annalisa Torres ruled that while Ripple's sales of XRP to institutional investors violated securities laws, while its programmatic sales to the broader public and distributions to employees and developers did not constitute securities sales. The SEC lost on all key points. That's why they appealed. Today, Ripple filed a cross-appeal to ensure nothing's left on the table, including the argument that there can't be an investment contract without there being essential rights and obligations found in a contract. Ripple's chief legal officer, Stuart Alderati, noted on X. The Howey test determines whether a transaction qualifies as an investment contract and thus falls under the U.S. securities law. According to the test, a transaction is considered an investment contract if it involves an investment of money and a common enterprise with an expectation of profits derived primarily from the efforts of others. According to Alderati, the SEC will not appeal the ruling that XRP is not a security. They even apologized in another case for suggesting a token itself could be a security, said the executive. That's the law, and an appeal on these other issues doesn't change it. Both Ripple and SEC are expected to present further arguments in the coming weeks following the recent cross-appeal and appeal filings. The timeline for these developments remains uncertain. It's also unclear whether the SEC intends to focus only on disputing the fines imposed on Ripple, or if it will continue to challenge the broader ruling regarding XRP's status. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Ripple launches digital asset custody services for banks and Fintech. Ripple's move into crypto custody allows the company to diversify beyond its payment settlement business. Blockchain payments company Ripple has launched digital assets storage services for banks and Fintech firms. According to an October 10th CNBC report, Ripple debuted features that will keep and maintain digital assets for its banking and Fintech clients. The move is part of a push to widen the reach of its newly formed division and consolidates custody products under one brand called Ripple Custody. Ripple dives into crypto custody. The new features include integration with Ripple's blockchain platform, the XRP ledger, pre-configured operational and policy settings, and anti-money laundering risk monitoring. It also integrates a new user interface. The move helps the company diversify its offerings beyond payment settlements. Apart from its XRP crypto asset, Ripple is known for its RippleNet platform, a distributed network that allows banks to share updates on the status of fund movements. As more institutions eye digital asset investments, the demand for crypto custody grows. Custody service providers help institutions store their crypto by safeguarding their private keys. They also help customers trade and settle crypto payments, ensuring they comply with digital asset laws. In a statement to CNBC, Ripple's Senior Vice President of Product, Aaron Settleha, said that the new features expand Ripple Custody's capabilities to serve fintech businesses and scalable digital asset custody. The company also mentioned that custody is one of their fastest-growing businesses. The company said its custody arm enjoyed 250% year-on-year growth and now operates in 7 countries. Digital asset custody services gain traction. Banks are also gearing up to offer custody services for crypto assets. On September 10th, Standard Chartered started offering digital asset custody services in the United Arab Emirates. The firm said it would begin its custody business with Bitcoin and Ether. It recently secured a Dubai Financial Services Authority license to offer custody services. Meanwhile, Taiwan's Financial Supervisory Commission, or FSC, is preparing a sandbox for crypto custody services. On October 8th, the FSC announced it would start accepting applications in the first quarter of 2025. 3 private banks in the country had already expressed interest in diving into the crypto custody business. Our next top headline: 47% of traditional hedge funds maintain crypto exposure, says report. A survey reveals that almost half of traditional hedge funds have exposure to digital assets, with increased global regulatory clarity boosting confidence. Increasing regulatory clarity around spot Bitcoin and Ether exchange-traded funds in the United States and Asia has encouraged almost half of traditional hedge funds to obtain exposure to digital assets. A survey conducted by the Alternative Investment Management Association and PwC revealed that 47% of hedge fund managers trading in traditional markets have exposure to cryptocurrencies, according to a Bloomberg report. Crypto exposure was 29% in 2023, while about 37% of the 100 hedge fund survey respondents said they had exposure to crypto in 2022. Regulatory clarity promotes crypto adoption. James Delaney, Managing Director of Asset Management Regulation at AIMA, said global regulatory clarity was boosting confidence of hedge funds in crypto. The findings from this year's report indicate a steady recovery in confidence over the past year. Additionally, all traditional hedge funds currently involved with crypto plan to maintain or expand their positions. While 67% plan to keep their crypto investment steady, the remaining 33% expect to increase their exposure in the near future. Hedge funds used various strategies to gain exposure to crypto. According to the report, 58% traded derivatives, while 25% traded tokens in the spot market. Although derivatives have increased, spot market trading dropped by more than 50% compared to 2023. Edward Chen, co-founder of Parataxis Capital Management, an investment firm focused on digital assets, highlighted the possibility of generating significantly higher returns in comparison to traditional asset markets. The application of traditional investment strategies can generate much higher returns in crypto, given the market is less efficient. Still, 76% of hedge fund managers with no crypto exposure said they are unlikely to adopt digital assets in the next 3 years. Some traditional hedge funds stick to traditional mindset. The report noted that 2/3 of conventional hedge funds do not plan to incorporate spot Bitcoin ETFs into their current digital asset strategies. On October 3rd, Quinn Thompson, the chief investment officer at Lecker Capital, said that buying Bitcoin in its then current range of $61,000 was a no-brainer. Basing the thesis on Bitcoin's price action from March 5th, when BTC reached an all-time high of $73,700, Thompson highlighted a similar setup when Bitcoin defied a critical technical indicator. He concluded that Bitcoin's movement hinted prices may soon swing upward. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.